It is 12:35. Welcome back to the Big Show, being brought to you by Hertz Real Estate Services, Farmland Auction, Brokerage, and Evaluations. And I do want to let you know, too, the keyword of the hour this hour is PAY, P-A-Y. Log on to either 600-WMT or WHOradio.com. Type in the keyword PAY, and you could be $1,000 richer. We do it 13 times a day. It's a nationwide contest called $1,000 Freedom Fund. 12:36, as promised, we have got Brian Hoops on the telephone right now with Midwest Market Solutions. And Brian, we appreciate you joining us here on the Big Show today.
Yeah, it's always good to be on the Big Show and to talk with you, Dwayne. A lot of listeners are tuned into WHO Radio, and it's amazing how far away some of those listeners are that can still pull in that signal. It's very strong.
Yeah. Absolutely. Not only with the signal, but all the online listeners as well, and the ones that podcast and come back and listen to our podcasts and so forth. So, but we love talking farm here on WHO and WMT. And of course, Brian, you know that you speak a lot of farm yourself. And speaking of farm, boy, we're seeing corn and soybeans back down for a second day in a row here. Kind of some sharp losses here since the beginning of the week.
Yeah, you're right. Yeah, I actually grew up on a farm in northwest Iowa, so I spent a lot of time there, a lot of time listening to radio stations in Iowa. You're right. Contract lows in corn once again, soybeans down along with them. Wheat futures finding some pressure as well. It's the funds, it's managed money that's really putting the pressure against the markets in here. We had some negative news, I thought, going over the weekend as far as weather. It really turned negative for prices. It's a real beneficial forecast, beneficial growing conditions. All that is continuing to weigh on this corn market. So we expect by about July 20th or so, 50% of the nation's corn crop should pollinate by that time frame. And it's going to pollinate under fairly cool and yet very wet conditions. So it looks like yield potential is going to be very, very high this year. We had crop out ratings out yesterday afternoon, and the state of Iowa reported 86% good to excellent ratings for them. That is the highest rating Iowa has had since 1994 for their corn crop. So I know things are looking good there in the Midwest. National ratings are the highest since 2018, 74% good to excellent. That year, 2018, we set the second largest yield in history at 176.4 bushels per acre, trailing only 2017 by just 0.2 of a bushel. So, these crop ratings, they're not the end all type of trade, but it does give us an indication that the yield potential is very high for corn and for soybeans. Now, soybean ratings are not as high as corn. They're only about 66% good to excellent, even down a little bit from last year. So that's why I think we're seeing the bulk of the selling pressure come against this corn market. Plus, soybeans still have to go through that reproductive stage, and we could turn very dry in August, maybe even late July we could turn dry, and that could give us some reprieve from the selling pressure that we're seeing here in the middle of July.
Yeah, so is that kind of where we're seeing the pressure too, Brian, in the soy meal? And oil's actually been on both sides of unchanged today, but now we're back to just fractionally lower here at the moment.
Yeah, it's going to be hard for any of these markets to really turn around and rally here appreciably, but yeah, as I mentioned, corn contract lows. I think meal hit a contract low as well this morning. Just too much supply of meal out there right now. Oil is the one market that has shown some life and some strength, and trading over 53 cents a pound. That market it probably will continue to struggle if soybeans stay at these lower price levels. But it does have a little bit more positive fundamentals based off of the mandates for usage of biodiesel fuels increasing substantially over the last several years.
Brian, I was hoping we could talk about livestock as well here. Live cattle and feeder cattle back to sharply higher. We saw over $3, even over $4 gains at the close on Monday, and in the feeder cattle market, we're back there right now again. So we could be talking, $7, $8, $9, $10 higher just over the last couple of days in feeder cattle and live cattle too, anywhere from $2 to $3.50 higher.
Yeah, it's been a very strong bullish type market. The concern that I have, and that is really the only concern right now, is consumer demand and consumer spending, especially when you get past some of these key grilling holidays like Father's Day. You get past the 4th of July holiday, and you start talking about upcoming holidays. There isn't too many more here on the summer calendar other than Labor Day. So consumer demand is one thing that's a concern, but our supplies are very tight. Packer margins are in the black again. So it tells us that we should be moving higher in the cash markets this week. The cutouts at midday, they were stronger once again. They were up $3, over $3 in choice, and almost $2 in the select. So show list numbers are down this week, reflecting those tight supplies. We're looking for a couple dollars higher cash trade compared to a week ago, and the futures market is dialing that in with this aggressive move that we're seeing today.
Yeah, last week, with that cash market steady to $2 lower, and I thought we might trade a little bit even lower yet, so I was kind of surprised to see it hold steady to $2 lower. And do you think we're on track for that again this week, or what are your thoughts on the cash cattle markets?
Yeah, I think we're going to see higher cash trade this week. The futures market's anticipating that. Some of the trade that was occurred late last week was that steady money, and it kind of set the tone for early part of this week that maybe the cash trade is not going to be any worse than steady. And with these cutout values moving higher and with the show list numbers being smaller, it really gives us that indication that we may see a $2 to $4 type trade on the plus side in the cash markets this week.
Well, we're certainly seeing a lot of the trade pretty much reliant on what we do see at the consumer level, like you said, with box beef prices. And really the same thing is said for on the pork side, too. We haven't seen a lot of pigs sell yet this week in the cash hog markets, but those hog markets, they're just kind of been back and forth here today and still seeing a little bit of pressure as we head through the noon hour right now.
Yeah, the hog market, I think, is one that has probably topped out for the summer. There's a lot of people trying to pick tops in the cattle market and the hogs for that matter. I think the one that you can point towards that has actually done it is the hogs, getting above 110, 112, 113, almost 114 in that August contract. It seemed like it was just too rich of a premium that was holding. But I wouldn't be surprised here to see the market have some sort of retrace that maybe move back into the 109 to 110 area in that August contract.
Okay, very good. What about October? We're still about $7.50 away from hitting that $100 mark. What's it going to take to maybe bring that contract up a little bit?
Yeah, it's one that I think possibly could see some strength. It is sharply discounted to the July and August contracts. So it may start to move back up into the upper 90s. I think to hit $100, that's going to be a tough stretch. That is going to be, a very, very difficult hill for that market to climb. That we expect supplies will be much larger as we get into that late third and fourth quarter for the hogs.
Okay, well, very good. Brian, how can our Big Show listeners reach out to you at Midwest Market Solutions?
Well, you can reach me directly, 417-501-5132, or you can go online to our website, MidwestMarketSolutions.com, and click a link and find all of our list of our offices available to serve your needs.
All right, very good, Brian. We always appreciate your time here on The Big Show.